Hi everyone, in this video I'm going to show you how to trade gold. I'm going to break it down from the weekly time frame to an entry time frame at M15. If you load up tradingview.com, top left corner, search for xauusd, which is gold, and then just click on the broker you trade with. I'm with IC Markets. Load up your chart, overstart on the weekly time frame. This is where each candle represents 1 week of price action. You want to mark your support and resistance levels on the weekly. So as you can see, we've got a support here. And we've got resistance there. Go into the daily time frame, get the rectangle tool out here, mark support, and mark resistance. So we can expect on the daily, if price is here, it's going to go down at this level. If price is here, we can expect it to go up. If it's there, it's going to go down. However, if it does breach it, we can expect to retest it and go to this level here. And if it breaches that one, it'll go to here, the weekly. So that's how we can identify where price is going. So on the daily, we know it's a red bearish candle and it's moved from this daily level to resistance and it's looking to go here. So we'd look for sells today. So that's how you identify your plan for today. So we would be selling it. You then go into the H4 time frame, get the rectangle tool out once again. You want to mark your support and resistance levels. So here I've got the most recent resistance. And you want to mark your support region as well now. So when the market opened, I'm just having a look because I should have done this yesterday in the morning. So before the market opened, this would have been a H4 level. So there are your H4 levels. If price does breach it, then we get, like I said earlier, we can expect it to retest it and then go down. So it looks as though it might go down at this level here. Then if it breaches that one, retest it and go down further. But looking at the H1 would give us a better idea what's going on. So this is where each candle represents 1 hour of price action. Top left corner, go on Fibonacci retracement. So we're looking at the price action of the previous day. So for Wednesday, we'd get it from the high, the lower high, all the way to the lower low of that day. So these would be your levels before the market opened today. Well, before the London session opened today. You then want to go ahead and mark your chart as like that. You've got your levels. I'll just change the color to that one. Again, you can have them any color you want. I just prefer to stick to these. So these would be your levels before the price action opened. So we know if price comes to this level here in the London session, we'd be looking for potential buys. Potential buys. Why am I saying potential? Because remember, on the daily, we need to find out what is a candle bullish, is a candle bearish. Obviously the candle's bearish, so we're only looking for sells. In this case, we wouldn't be actually buying it. So the plan would be to potentially sell it. So in this case, when London session opens around 8 o'clock, we'd expect it to breach it and go down, retest it, and then go down to this level here. So as you can see, it has kind of done that. So it's retested it, and then at 6 o'clock in the morning, massive bearish engulfing candle, sellers into the market. Here's where a lot of traders in London would have entered, the institutions potentially 8 o'clock. But as you can see, prices are retested, it's going back up. So I'd still think it is bearish. Price is just retesting the support, which is now resistance. And once it's retested, it'd look to go down. So I would be ready to enter a sell trade right now. And this is how I would trade it. So I'd have my stop loss just above this level here, just in case it retraces. My TP1 would be minus 23, but obviously that's not a very good risk to reward ratio. It's only 1.32. Ideally, my target profit would be this region here, the minus 61, and that would leave a risk to reward ratio of 4.84. So we've just got to wait for a candle to close as a bearish candle, and you can monitor this on M15. So as you can see, price is slowing down potentially. Sellers are looking to take control potentially, but it's not ready yet. Remember, you only trade at the level, on the level, and when the candlestick is in your direction. So I can't enter right now because it's not ready. So what I could do is I could just draw a little trend line here, and once the price has breached the previous high or low, that's when I know it's bearish. So once it's gone, price has gone down from this black line, that's when I could potentially enter the trade. So as you can see, that looks like it's an inverted hammerhead. If it closes like that, the price could potentially go down. So we've just got to wait and see at the moment. It's far too early to enter, and obviously your stop loss would be just above the previous lower high, just in case it retraces. But I like to enter on M15. Some people like to go further to M5. It's entirely up to you. So yeah, that's how I would trade gold, and potential sell trade right now, but I'd like to wait and see once it's breached this one. So I'd be looking to trade this today and right now, in fact. So yeah guys, that was just a quick session on gold, how you do your analysis from the weekly to the daily, the H4, H1, and then if you're entering, it'd be enter on M15, stop loss just above the lower high, and I've shown you a risk reward ratio of, it's gone down to 3.34, that's because I've had to increase my stop loss, which isn't bad. So I've done that in less than, I've just gone over 5 minutes, so 6 minutes this video. So I hope you enjoy the session. If you want me to analyze any other pairs, Forex, commodities, cryptos, drop me a message. Like, share and subscribe. Peace.